Welcome to the Facts versus Feelings podcast. I'm your host, Ryan Detrick, and I'm joined by my co-host, Sonu Varghese.
Cutting through the noise each week with Ryan Detrick, Chief Market Strategist, and Sonu Varghese, VP Global Macro Strategist. Taking out the boring and helping investors focus on what really matters. A quick note before we start the show. Investment advisory services offered through CWM LLC, an SEC registered investment advisor. Carson Partners, a division of CWM LLC, is a nationwide partnership of advisors.
And Sonu is not here, so I'm just going to run with this one this week, everybody. We have Facts versus Feelings coming with two of my very best friends in the industry. We'll get to that in a second. This is episode 168, Geeking Out on Charts with Chris Kimble and Scott Brown. This is going to be so much fun. Hopefully I'll do my best job of being John Stockton to make sure everybody gets a chance to talk and do this. I'll start with you, Chris. Where in the world are you? I don't know. What's behind you there? Where are you?
Santa Claus Rally.
Okay, there you go.
Santa Claus headquarters.
I figured you'd have like a Santa Claus hat or something on, Chris. Yeah, no.
Well, I thought about it, but that was my closest I could do. I like your hair better than mine, you know.
Well, yeah. So I'm pumped to do this. So let's do some brief intros. Those who don't know, Scott, you and I worked together many years at a place called LPL Financial. A lot of fun. You since left there, and you've kind of started your own thing. Give us the high level of what Scott Brown's up to.
Yeah, so for the last 3 years, I've been running Brown Technical Insights. You can find Brown Technical Insights on Substack or just at browninsights.com. But I'm doing a lot of what I did when we were together at LPL. I'm providing technical investment research, primarily to financial advisors, but anybody can sign up. I think we've got good stuff for sophisticated retail traders and investors. But just looking at the market from a purely technical standpoint and trying to help people make better decisions in their portfolios.
No, love it. You know, I mean, I read a lot of stuff, right? We all were busy, and I will just say this, like, you two are two that I absolutely rarely ever miss anything you say or do, and that's why I'm excited to get your views on what just happened this year and where we're going. But Mr. Kimble, you and I have been friends for many years. We've had a lot of fun together. What's the latest with you? You know, you had the newsletter. You're kind of doing some. What are you up to anymore? What are you doing anymore? Just besides eating and having fun.
Yeah, just growing gray hair and cooking and a couple of things. But no, as I shared earlier this year, you know, with you, Ryan, I've kind of changed some structure, you know, as a financial planner for 20 years and then had Kimble Charting Solutions, you know, for, you know, the last 25 years. Mm-hmm. And so I just changed, kind of got away from retail and have just managing assets for 4 or 5 few people around the world, you know, currently, and having a wonderful time. The markets are really exciting, and this will be my 46th year in the business coming up. And I think I'm as excited about opportunities for the three of us and everybody as ever.
So, you know, maybe here, Drew, we'll put this up. An image, Chris, get this image. The image of you playing baseball from a long time ago. We'll put this on the YouTube channel right now. A young, spry-looking Chris Kimble just showed up. Talk to me about your baseball career. We're going to get into the markets. That stuff's boring to me. I love to hear it. I didn't realize you were legit. I mean, you were a real-time baseball player, right?
Well, I tried. You know, I came from a small town in Kansas, and at the time, there was a place called Emporia State University that was having better luck than KU and K-State. And so I just thought I'd, you know, maybe you could make it into the pros, but I got to see if I could even make this. So maybe the most nervous time of my life was trying out for a baseball team of 35 people when 145 people showed up, and I didn't play high school baseball. And short story long, we ended up winning the College World Series my junior year and got 3rd place my freshman year. So that was a lot of fun. Long time ago.
Well, that's I didn't realize you won the College World Series. That is awesome. So let's just start.
It was a small college, you know, so it wasn't what we see on ESPN, but it was still big for us.
No, that's awesome. That's a neat story. Well, let's get into it. I mean, Scott, I've followed you for a long time, obviously worked with you for a long time. I think you and I kind of look at the world a lot of times very, very similar. I'll read what you say and say, oh, okay, good. I agree with Scott. So that makes me feel a lot better. What is one thing, Scott, about this year that, let's say, you got wrong? I mean, we all make mistakes. I mean, trust me, I make a ton of them. What's one thing that surprised you and maybe you didn't see coming and maybe you got incorrect this year?
Oh, that's a good one.
Yeah, see, I see you come on my podcast. I don't even know what I'm going to ask you. It just happens. Yeah.
It's kind of hard to say just.
Oh, come on, Scott. You messed something
into
up.
the year, right? And in some respects, that turned out to be right. Obviously, April, we limped into the beginning of this year, and then we had the April crash. But certainly at the April lows, I would not have expected us to be up. We're up about 17% year to date. Not in a million years would I thought we would have snapped back that quickly the way that we did.
Yeah. So so one more for you, Scott, and then Chris, I'll get to you. What are you big themes for 26? So again, just so everyone knows, we are recording this on the 22nd. So this will be this is the last podcast of the Facts versus Feelings, not ever, of 2025. That's a surprise. No, this is the last one of the year. So we'll talk big picture, but what are some of the trends? Well, let me put it this way. I read your note this morning, Scott. You talked about financials. We like financials. What are you seeing in financials? Can they keep leading in 26?
Yeah, I mean, the problem with financials is they don't have a lot of beta. So if technology is working, which technology has kind of been correcting over the past few months, if tech is working and financials are working, tech's probably just going to outperform. But recently it hasn't been. And so financials have been able to take some leadership, but they've been working in absolute terms for the past 3 years. I was looking at the big picture chart before this. I mean, it's just stair-stepping higher, respecting all these key technical levels. And they just broke out of a nice 3-4 month base, up above the September highs. And so I think that's really, we're recording this on December 31st. So we'll see if it becomes a top year in play, but it's a good setup going into 2026.
No, we like that area. I mean, Chris, one thing I'll just rip off the Band-Aid. You have liked gold for a while. And Carson Group is a broken record on this podcast, talked about we added some gold to some of our more aggressive models March of 2023. And I thought gold was going to do well. And honestly, you telling me, Ryan, something's going on here, you might want to look at this. That sure helped me with that, and our advisors and their clients. Thank you, Chris, for kind of pushing me that way. And one of the things I'll never forget, you said, maybe I did forget, because I'm going to butcher how you said it, but you said, it's not that I think gold can go to 10,000. I'm afraid gold can go to 10,000. I'm not making a call that you're saying it's going to go to 10,000 from 4,400 right now. But these bull markets last a lot longer than you think. One more thing, Chris, I'll let you jump in. Our friend JC Peretz says, if this gold bull market ends like right now, it'd be the shortest bull market ever. These bull markets last a lot longer than you think. Talk to me about why you were worried gold might go to 10,000 and why you liked it and why you think it can keep going.
Well, thanks, Ryan. Yes, we've been heavy on my wife, as Ryan knows, is Pam, and Pam and I made a personal decision.
She's the brains and the beauty of the Kimble operation.
Absolutely. Always has been. She's my better 90%. So let's get that out. That's for sure. But there's certain patterns in the foreign currencies. Ryan had me thinking a couple of years ago that a long-term trend was changing. And so Pam and I, and our customers that we're operating with, we decided that we thought the indices would maybe underperform just the major stock indices, but the metals were starting a new ball game that to me was going to be a 9-inning ball game. And I still think we're just in the third or fourth inning of that.
Interesting. So, Chris, one more for you then. I know you shared some chart packs with me. One of the things that gets me is gold's way up here. But then you see like copper, you see silver just breaking out, palladium, there's a lot more metals, and you're more the expert than I am. But a lot of these are just now breaking out, kind of what gold was doing literally in early 24. We see how gold's done the last 2 years. Are we going to see a major catch-up trade in the area of if you drop and hit your foot, it hurts? What do you think about 26, 27? Are we going to see that, you think?
Guys, I'm a product of, think about this, I got my securities license in February of 80. The Dow's at 1,000.
Wow.
It was still at 1,000 2 years later. But the thing that I'm a product of is, when I got my securities license, guys, can you imagine if you would try to talk stocks to somebody that they had not went up for a decade and a half? Gold was at 850 and short-term interest rates were at 18%. So it was really easy for people to, if I would bring up equities or even bonds, just, Chris, don't let the door hit your backside on the way out of my house. It wasn't. But guys, I've been asked several times, if you could go back in history, when would you go back? And to me, it's an easy one financially wise. I'd go back to the summer of 82. My mentor, John Templeton, is on Louis Rukeyser, and the Dow was below 800 at the time. And Sir John says, I don't think we'll ever see these numbers again. So short story long, I really saw, if I could go back in time, once the Dow, the S&P broke that sideways 16 years, it just never looked back, guys. And so as I sent Ryan last night, I'm shocked that the Swiss franc is at the same price as 14 years ago. Copper's at the same price as 14 years ago. GDX is at the same price. SIL's at the same price. Copper's at the same price. So in my 45 years, I've never seen so many assets in decade and a half sideways patterns. That even though these assets have done well for 2 years, there's still been dead money.
Yeah.
We always hear the talk about charts have memories. Well, if these have memories, they actually have poor tasting memories because they've been dead money for that long. Well, what if these assets, guys, would break out of sideways 15-year channels? That's, when we think long term, if I could get anything across, is get in a plane, look at the 30,000-foot view of this, and what might that mean, if these things break out?
Well, Scott, I think it means we probably want to own some of them. You work with financial advisors, and you're incredible. Your incredible research you do now. You think of it through the lens of a portfolio, right? You think, okay, we do this a lot on our. Okay, gold goes up, whatever. Well, what does it mean for a portfolio? How should you invest in it? Scott, what are some areas that you like? Let's say this commodity bull market's real. How should a financial advisor potentially leverage some of that to benefit their clients?
Yeah, I think one thing that's nice about if you can drop it on your foot and it hurts, is that means you can put it in a vault. So a big problem that retail investors and financial advisors have is if you see something good, big example of this that I remember, from 5-10 years ago, oil prices going crazy, is you want to bet on oil prices going higher, you're investing in an ETF that uses futures. Those products don't work like you might think that they do, but gold and silver and palladium and platinum and things like that, you can put them in a vault. And so you do have ETFs that can, for all intents and purposes, with relatively low expenses, track these metals. And so you can benefit pretty easily and without a lot of headache, not having to get yourself involved in the futures market or worry about being eaten up by roll costs and things like that. So, interest rates have been rising. Bonds haven't done a lot for you. I think it's a pretty easy decision to maybe have a little bit less bonds and a little bit of metals.
Mm-hmm. No, well said. Chris, you said the things that are flat 14 years ago. I don't think our waistlines. I think our waistlines are higher though, right? 14 years ago.
I know. Yep.
Yeah, mine is. I'm sure. I don't know, Scott. You've always been pretty slender, I guess. I don't know. That's
we're trying.
Yeah, well, let's see. So, Chris, what else? I love talking about history and where kind of your career. You work with Sir John, and you talk to him a lot. You talk about him a lot to me when the discussions we have, just the things he's taught you. What would he think if he were here today and he saw AI doing its thing and all the crazy stuff? What would he say, you think, about where we are right now?
Oh, well, that's a wonderful question, Ryan. I pray and ask that to him all the time, hoping for a good response. I think you'd, as you know, Ryan, when I sat down with him in the 90s, he said, Chris, outside of the Bible, the book that had meant the most to him was the book, The Extraordinary Popular Delusions and the Madness of Crowds. And so that's, as you know, Ryan, I made a promise to him that I would always bring up this book for as long as I was alive, because it meant a ton, to me. And so I think, a lot of things, Ryan, that he brought up. He brought up about 10 things to me in '98, saying, Chris, I think this is alluding to a underperformance in equities for the next 10 years. John never talked trash. He didn't talk crash. But when I saw that in 1999, he had two major positions, he'd shorted every .com stock in America, and he owned 0 coupon bonds of the highest quality governments in the world. So without him saying anything, I think Helen Keller could see what he was thinking, at that time. So been a fabulous teacher, and I believe he'd say there's some parallels to then, as now. And one thing too, Ryan, when you think of dead money, EEM is at the same price as 2007. So you believe that's 18 years later, it's at the same price. So what if it would break out? So there's a lot of exciting things that I think have bored people. I love, as you know, Ryan, we've known each other for a long time. I love to find things that are extremely out of favor and become an opportunity.
Well, absolutely. Just so everyone knows, EEM is emerging markets. That's the emerging markets ETF. That's pretty much dead money for a long time. Scott, I mean, you look at the world as similar to what Chris and I just talked about, with using market sentiment. And I think what's fascinating to me, just last week, University of Michigan Consumer Confidence, current, how you feel right now, the current one, the lowest in history. Now, again, this is about the economy, and the economy stock market don't always, they rhyme sometimes. But then you look and you have consumer discretionary, like breaking out on a relative basis and on a nominal basis, yet the consumer feels a certain way. What's your take on the disconnect we continue to see here, what the consumer says versus kind of what they're doing?
Yeah, well, I'll first say that I'm a big fan of, focusing on what they're doing, because social media, I mean, it's always been that way, but I think things with how people say they're feeling and social media, and people are just more negative and polarized today. But you're right. You look at what the market's doing, consumer discretionary stocks, they were kind of started correcting in the summer, but the past few months, they've really been firming up. I mean, the restaurants, probably benefiting from lower oil prices. I mean, we've got retail gasoline prices at multi-year lows. Oil just, at its lowest daily and weekly close since 2021. And so that puts more money in people's pockets. I will say, looking at the markets, I was surprised, actually. The past few weeks have actually seen some signs of excessive sentiment. It doesn't feel that way. But it does seem like, positioning wise, people are maybe a little bit optimistic. The shape of the VIX curve, the spread between the spot VIX and the 3-month hit its kind of widest since 2022. That Bank of America bull bear indicator just hit a sell signal, I think 8.5, and put calls have been really, really low. So people not really interested in paying up for protection. That, I think, is a little bit of a risk as we head into midterm years, which you very much know are the weakest of the presidential cycle, tend to see deeper corrections. I think that's something to think about. But I'll be honest, it doesn't feel like people are overly optimistic.
Great points. I get to travel the country, talk with our amazing Carson partners, our financial advisors and their clients. And I never get asked the question, wow, this bull market's really great. How high is it going to go? I've never had that question. So I'm with you there. Chris, one thing I just thought of, you've shared this so many times with me. By the way, let me do a little disclosure. Just take a drink, guys. Take a second. This is episode 168 of Facts versus Feelings, geeking out on charts with Chris Kimble and Scott Brown. And we've had huge downloads this year, huge listens. If you want to give us a like, give us a follow, that'll go a long way. And also, we do have the comments turned on the YouTube channel. So all listeners, you want to give us some help, feel free and give a comment. And Scott and Chris, I don't know if you heard this or not. A couple of weeks ago, I said, give us a positive comment. Now, marketing slapped my hand a little bit. I'm not allowed to say that. But what I am going to say is give me the positive comments, give Chris the negative comments. That way they all even out. Now I'm teasing compliance. I'm teasing. Just give comments. We don't care. The algorithm doesn't care. In fact, negative comments actually go a long way, I've heard, because then people come in and defend you. So anyway, enough of that. Just we appreciate comments anywhere you can. So thank you all the listeners. I think we've done 52 of these. I don't think we've missed one all year. So then I say we're not going to miss them. We keep doing these. So thanks as always. So Chris, looks at cool stuff. I just such neat stuff, and you share it kind of with me privately. But let's talk publicly if you want. I hope you're okay with this. Full moons. You've done incredible work around full moons, harvest moons, blood moons, and there have been times when the masses actually peak or trough around these full moons. Last comment, and I'll go to you. My wife Emily worked in a hospital. And she swears by on a night of a full moon, that's when the crazy, what happens. So there is some psychology, I think, talk to anyone who works in a hospital, they'll tell you that's when the crazy stuff happens. How many times have you seen this full moon stuff, and why do you think that happens?
Well, let's just start with the answer. I don't know why it happens, Ryan. The thing that I believe it was the 90s, but as an author, Chris Caroline, he wrote a book called The Spiral Calendar. And the thing that sticks out to me about Chris's great book was he said that during full moon nights, that's the night that in the National Hockey League, they average the most amount of time in the penalty box.
Wow. Okay.
So,
I didn't know that one. That's awesome.
We've always heard, the physicians, like you say, Ryan, if you talk to veterinarians, ironically, they'll say some of the same things. So I don't know why, guys, but ironically, over the last 18 months, if you look at most of the major highs and lows in frustrating TLT in the bond market, they've actually taken place on full moons. So I'm just aware of it. I mean, and it's along that same line, if you think about, guys, over the last 4 years, when were the two major peaks in the last 4 years that took place before 15 to 20% declines? And they both took place at the first week of the first week of winter. So 2021 and 2024, I've never been able to explain this. I just don't think we should be an ostrich in a sand and be unaware of it.
Interesting. When was the last full moon, Chris? Didn't we just have one like a day or two ago?
Probably a few weeks ago. It's not the highest on my list, but when I look out in the sky, I see that. Let's look for a flex.
The only reason I'm saying that, so I have two dogs. I've talked about my dogs before. Walter, we don't know how old he is. He's probably 7 or 8. Big Great Pyrenees, and then Mabel, a Great Dane. She's like 2. Last night, so I guess this would have been on the 21st, which was the shortest day of the year, actually, by the way, the first day of winter. They got in a heck of a fight. They haven't gotten in a fight in like 2 years. And then you just said how animals go kind of wild. I don't know. For whatever reason, my dogs got in a little scrap yesterday. It happens. They're animals. Yeah. So, Scott, let's see here. Again, in your morning note this morning, you were talking about China potentially trying to find support. You talk about NVIDIA doing an inverse head and shoulders. Maybe there's something there. Let's get a little geeky. What are some of the more specific things you're seeing right now?
Yeah. So Chris mentioned EEM. I mean, I've had a position in China in the models that I run for a while. It has not worked for 3 or 4 months. But if you really zoom out, we're talking bigger picture. It's been a pretty orderly consolidation that is all happening above this about 3.5, 4-year base that China broke out of earlier this year. So, I mean, as long as we don't lose the top of that base, my expectation is we're going to be able to break out higher. And I mean, China's not as huge of a weight in emerging markets as it was, 5 or 6 years ago, but it's still a good 30% chunk. So if that moves higher, it's probably, going to work with EEM doing the same thing.
I tend to agree. Chris, you have a strong feeling on China or EM really right now?
Well, as we talked, FX or EEM is at the same price as 2007, and then you do the same thing to FXI, do a 30,000 foot view. It's at its 50% fib level of that long-term trading range. And so it's struggled the last few weeks at that 50% level, but I'd sure want to own it if it broke above that. And we got a buy order there, just an alert that if it does take it out to the upside, I'd want to own it.
So you mentioned fib levels there. So that's Fibonacci levels, Fibonacci retracements. Chris, you've shared so many times with me just how Fibonacci is all over nature, right? We have 5 fingers. Right, that's a Fibonacci number. If you go from like, I don't know, I'm on the YouTube channel, but your into your hand to like your shoulder, I don't know, somewhere in there, there's like 61.8%. I forget how exactly it works, but they're all over the place. Like our faces, maybe not our faces. We're three ugly guys, but if we got a pretty face, like there's perfect Fibonacci retracements there. The Mona Lisa has it. It's all in nature. Can you give me some examples, Chris, of some amazing examples of Fibonacci, which is in nature, which again, then you look in history. And one more for me, and I'll go to you. One of the times I said, I'll start paying attention to this Fibonacci stuff. All right. If you look at where the market bottomed, and I guess it was August of 82, I believe, August of 82, the S&P 500 bottom. And then the major peak that we had in 2007, and then a 61.8% retracement was 666. That was the lows in 2008. So from way back 82 all the way to 2007 peak, perfect Fibonacci retracement, literally to like the point of that major retracement. That's when I said, okay, maybe I'll kind of pay attention to this stuff, because I don't think that was a coincidence. Much like when the crazy stuff happened with full moons. Where are some real world examples of Fibonacci numbers in nature, Chris?
Yeah, I think the thing that amazes me, guys, is that let's go down 10,000 feet at the bottom of the ocean, and we're going to find the Nautilus shell. And so then we see the spiral calendar. Yeah, I'm from Kansas, and our Kansas flower is the sunflower. Well, stare in a sunflower for a while, and you're going to see the exact same pattern. You know, we just got through with hurricane season, and it was really a great one this year. But if you get in a satellite, look down on the top of a hurricane, you see the exact same pattern as the Nautilus shell and the sunflower. And then now with the advent of the James Webb Telescope, that we can now see beyond anything that we've ever seen in the history, you know, thousands of light years away. And what shape do the galaxies have? Well, it's the same Nautilus shell, sunflower shell. Even if you look at our president from the side, his hair has that same pattern to it. So it makes sense.
Yeah, that's
So I mean, broccoli, cauliflower, pine cones, guys, as the three of you know, it's I would encourage people to go to YouTube. It's so fun, and just look up Fibonacci in nature.
Yep.
And you might be surprised how much of it is out there. And I still don't get it, guys, but as the three of you, two of you guys know, it can be beneficial to use it in our business.
I just realized there's three of us. That's another Fibonacci number. So there you go. Scott, I mean, again, I read your stuff all the time. You sometimes put out Fibonacci. You kind of, how much do you use that when you do your technical analysis?
A little bit.
Yeah.
You know, for the retracements and stuff, you have a big upswing or a big downswing, and then you start corrective action. You know, usually you look those classic 38.2, the 61.8, like those are logical places to kind of pull back to and then resume the prior trend. But I'd say I'm a little bit more of a straightforward trender and strategist.
Yeah. So from that point of view, you know, we heard for 2 years, Scott, only 7 stocks going up, and we pushed back against it. I think you did as well. Talk to me about market breadth. How's market breadth looking as we head into 2026? I want to give you some flowers for a minute. In late 2021, right, everybody got their money from the government, and stocks were going up, and everybody's making money gambling and doing all this crazy stuff back in late 21. You were out there saying, you know, something's going on here, because in the fourth quarter of 21, utilities led, like healthcare led, the defensive stuff led, low vol led. And you were one of the very few people saying, listen, maybe slow down a minute here. Something could be off. Of course, you didn't know. No one really knew the trouble that 22 was going to have. But you were listening to the message of the market and saying this. And I know for a fact, because we were working together, you were ignored. I know this because we work together. A lot of people at our team ignored you. And I was like, I hear what you're saying, Scott, but, you know, it is what it is. Maybe it's why we both left. Nonetheless, what are you seeing now when you look at markets from that point of view? An amazing call, by the way, in 21 or late 21, early 22.
I think we're seeing that something has changed in the market's view over the past 5 or 6 weeks for the better. I know you and Sonu have been talking about.
I like hearing that. Good. Thank you, Scott. Good.
I know you and Sonu have been talking about economic acceleration, and you know, the 7 stocks is just nonsense. I mean, if you look at those 7 stocks, they've all been completely disconnected for all of 2025. You know, there isn't a Mag 7 trade going on at all. But I would say if we were having this interview in October and early November, I probably would have been one of those Brett Bears. I was not loving what we were seeing. We were starting to see healthcare really surge. Utilities had been strong. Staples were potentially bottoming. It was like, are we setting up for one of these kind of late kind of things? Maybe we make new highs, but we start to see defensive rotation. Do we have problems for next year? But since we bottomed in November, I mean, it's been financials, it's been industrials, it's been small caps.
Yeah.
And so again, my view is the market's sniffing something out. I don't have to guess or know what it is, but market seems to be pricing in economic acceleration. Everywhere you look, equity markets, you look at bond markets, treasury yields are soaring, but tips, break evens haven't gone up at all. So it's pure. It seems like it's not an inflation story. It just seems to be that the market is pricing in a growth acceleration, and you've really seen a lot of firming from those cyclicals like financials, which we talked about, just broke out of a 3-month base.
No, good stuff there. Chris, what's your take on market breadth and kind of what we're seeing? And maybe part two to that, I'm a big fan of your shoebox indicator. I know you don't want to probably give it away. It's proprietary, but talk to me about your shoebox indicator, kind of what it is high level, what it's saying right now.
Well, one of the things going back to 98, the thing that jumped out to me, guys, was you had a couple of things then. You had junk bonds started making lower highs, and the NYSE advanced decline did the same thing. So it's kind of interesting if you go to 99 or 2000, and I apologize just through age and time, but it was a similar situation that the market, like in 99, guys, don't quote me, but I think it was up like 20 some percent. But yet if you took 4 stocks out, it was flat.
Yeah.
So it's kind of funny how some of those things smell, similar. But since then, the first chart I want to look at every day is how are some of the junk bonds being priced. I'm a believer in generals and troops, and I believe the troops are the junk bonds. And when the troops are the healthiest, then the overall market is the healthiest. So it's an unusual year that when you look at how well the S&P has done, and the junk bonds are at the same price as December of last year. So I don't see that they sent a negative message, but it is a divergence that we haven't seen in a long time. So it'd be really positive to see RSP, see it just as what Scott was saying, RSP finally broke above 2024 highs.
Now, let me just jump in. RSP is the S&P 500 equal weight. So all 500 stocks count the same versus cap weight. That's what the RSP is. Yeah.
The bonds, the junk bonds and RSP have been flat for 12, 13 months. RSP is trying to do this, poke above it. It'd be a real positive if you'd see junk bonds join RSP, when you talk about internal, guys. So I don't think there's giving a positive nor a negative. The divergence sticks out to me, but like Scott's saying, and you see it too, Ryan, some healthy things are going on underneath that we haven't seen for a while.
Yeah, November when we had the ballpark 6% correction, everybody freaked out. Everybody was just so bearish on a fairly normal 6% pullback after a 38% rally. We were out there. Our team, myself, was saying, "Listen, look at junk bond. Junk bond's actually doing okay early November when the market was cracking down, saying, listen, this is probably just a normal correction, mild correction after a 38% rally." And once again, I think the smart money was credit markets. I mean, we have probably about 10 minutes, give or take. Some big pictures. This has been awesome, guys, by the way. Thank you so much for joining. Obviously, I'm a big fan of both of you. Scott, tell us one more time how people can kind of find the cool work that you do, but then also maybe give some other people you follow. Obviously, Chris and I, that's fine. Let's not go that route. But other people you kind of follow that you think will help the listeners and how people can find more what you do.
Oh, yeah. So, again, it's browninsights.com, or you can go to Substack and search Brown Technical Insights. I don't do too much social media, but I'm on Twitter at Scott Charts. I'll even throw a little coupon or a discount code if people want to check out, the full service and what everybody's about. But yeah, I mean, Twitter, it's kind of how I became a technician. I don't want to make too long of a story, but following people like yourself, Ryan, I followed you before we both joined LPL. I remember 2 days before I was scheduled to start at LPL, you tweeted out, I was just literally in my brand new apartment. You said, "I'm joining LPL." And I went, "I'm joining LPL." Like,
wait a minute. I think we quit about the same time too, didn't we? That's funny.
It was, but I mean, that was really cool because there were people like you. There were people, you mentioned JC Peretz earlier. There were a lot of really good traders and technicians that were on Twitter. And as a just out of college financial advisor, with no technical experience, it's all just voodoo. What are these lines and things like that? It really helped open my eyes, and managing money in real time and seeing what worked was very, very influential. But that's funny that you asked about, who are my biggest influences, because somebody did in mail time, one of my reports
Yep.
last week. I'm a huge Chris Ferrone and Todd Sohn fan. John Lynch, when we were at LPL, got the Strategist research. I read their technical report every single day. If I went on vacation, I came back and read all 5 reports at the beginning of the week. Jeff DeGraff, the RenMech podcast, I
Yep.
love the way he just tests everything. I shout out to somebody else who's on Substack. If you want something free and just a great once a week report, Helene Meisler is just a technician legend in my book. But she was one of the first ones that I always read her stuff, and she's got a Saturday Chart Fest that she used to do on Twitter. But there's a ton of great people and a really active community out there.
No, good stuff there. Chris, I mean, again, you're not really doing the newsletter for retail crowd, but we can still follow you a little bit. And who are some people that you, obviously Sir John's up there. I understand that. Who are some other people you've looked up to over the years you've learned from?
You.
Oh, well, thank you.
You
You are on my podcast, Chris. Thank you.
Well, I understand, but it's been a real honor to know you. Scott does great work. JC has been somebody that we both, known for a long time. One of my wishes for myself to build a business is I wanted to try to build a shop to be a Ned Davis, somebody that I really admired enormously. And so with that, I really admire Warren Pies that used to work for Ned. And he reminds me of you guys. To me, he's a young shining star, somebody that I wish I knew personally, but I sure admire, his work, from afar. And, your buddy Joseph Family is, he's great. There's so many good people. It's amazing how much from when you and I met as speakers at Coronado Island, years ago, it's amazing how much this business, has changed, in different things in a great way.
I guess that was probably 2014, I guess, probably when we met right the first time was out of Coronado Island. Uncle Howard Linson, his big party out there was great, and how many people hung out and kind of where we all went now. We all started, kind of the same time, and shout out to Howard, who's obviously helped so many of us in this industry, myself specifically. Scott, one thing that's kind of cool that you started the company. I mean, you literally started the company. Chris has done it too. So Chris, I want your take, but you started one 3 years ago. You worked at the big place, you did your thing, and you said, you know what? I want to do this on my own. What are some things you've learned with the I guess the lens knowing listeners to this podcast are financial advisors? They're small business owners. They're RIAs, right? I mean, people that maybe are thinking about going to start a business. What'd you learn that you just had no idea was coming your way starting your own company 3 years ago?
Oh gosh, there's so much.
I know.
How much more taxes hurt when you have the money and you have to pay them versus you just get a paycheck and they're already taken out and you never saw them.
Okay.
That's a big one. In a business, I don't consider myself some business expert, but I would say if you're not growing, you're dying. There's no such thing as steady state. So you really just try and always be improving. The research is what I enjoy doing. The marketing and getting out there is not really the thing that I'm the best at, but it's something I've learned to do and gotten better at. And you got to always kind of have a goal and be moving forward. Otherwise you're probably moving backwards.
Well, that's great. Chris, you and I were working together for 10 years ago. We did a lot together, and you kind of hinted at that. You said, I just want to look at charts. I just want to do the research. But sometimes there's all the other stuff that comes in, and that's how it works. If you're going to work for yourself, that's what happens. What are some things you learned, Chris, when you were running your business?
Well, I think like you just said, Ryan, in a way, you're a juggler. It's I was honored when Howard Linson saw my work, and he came up with the idea, I think that's like chart art, and so I was honored when they voted me to be the top chart artist in the world. It didn't mean anything, but it was an honor, with that. But I think, what Scott's saying is there's a lot to it, and as I shared with you, Ryan, years ago, if I could just paint and do nothing on the administrative side, I'd be kind of a happier guy or whatever. And that's what I've just moved to. I'm just painting for a few people, around the world, and just loving it. Just love what I do. And I think these are exciting, opportunistic times for you guys and everybody out there.
Well, what I've learned, I've learned a ton from you, Chris, but the one is when we have an idea and we can back it up with, well, here's why I like XYZ because of this, and this. And then you tell it to people and they look at you like you are absolutely nuts. You're onto something. And that is easier said than done. Like, we manage billions of dollars on our team. You guys obviously saw research. You're out there. If you're wrong, when everybody's saying the same thing, and if you're going against them and then you're wrong, everyone's going to pound on you. Everyone's going to yell at you. It's hard to go against the crowd. It really is. But one thing I've learned from both of you is if you want to create some alpha, everyone can just be average. You want to create some alpha in portfolios and the way you invest, you need to go against the crowd when it lines up. And that's easier said than done, but both of you are amazing at that. So one more for each of you. Scott, start with you, then Chris, I'll let you kind of finish things up. What are you most excited about as we head into 2026, whether it be personal, your business, the market, or maybe just all three, Scott?
Oh my goodness. Well, I'm about to go on vacation. So I haven't had a good week off. I've been looking forward to that. We'll see.
Alabama football, not Alabama football. My bad. Auburn football. Apologies. That's like a Freudian slip.
No,
sorry.
No, I've had my heart broken too many times. That's not what it is. I don't know. I don't know. Personally, next year will be my 10-year anniversary. That's a big personal thing. So we're going to try and we're still arguing over where we're going to go. That'll be a big personal thing. And I'm excited for another year of just doing research and providing great insights to financial advisors and trying to keep this thing going.
Love it. Chris, one thing Scott brought up a good point. He's been married for 10. I'm at 20. How long have you and Pam been together, and what's the secret?
Well, it's been a long time. We shouldn't talk numbers here, should we?
Okay, you're right. Well, but maybe not. It's more than us.
I know we have 15 grandkids, and I wish I had taken a class on how to be spread myself when you're talking about juggling between 15 special, young people and stuff. So, Ryan, you and Son, you're just doing a wonderful job with what you're doing. The world and the investment community is a better place for what you share on TV and hear. So we're really proud to call you a friend.
Mm-hmm. It's likewise for sure. So give us, what are you excited about next year? The 16th grandkid, 17th grandkid? What are you excited about, Chris?
No, I hope that that water has ended.
Okay. Gotcha. That sounds like a lot.
Yeah, it is. No, guys, I'm really boring. I'm just really excited to think that there are many assets that have been dead money for a long time that could, on upside breakouts, could be wonderful opportunities. And, when you think earlier about Fibonacci, guys, if something had been at $100 for 40 years and it breaks out, what's its upside target? Well, from a technician, I think that's pretty tough. Mm-hmm. But that's where I think then Fibonacci can come in and say, well, the universe was created this way. Where is the law of numbers to come into play? And so you saw, Ryan, I sent you a 6-pack last night of the bias things that we own, but with upside Fibonacci targets that if they clear these 15 to 40 year sideways patterns, I've never been more excited. We just have none of us, I don't care how long we've been in the business, guys, the three of us and everybody listening has never seen this in the history of investing. It's rare.
Yeah. Well, no, that definitely makes it exciting because we all kind of know what's supposed to happen, and then reality smacks you in the face when it comes to life and investing. And that's the hard part of it, but also the exciting part of it. So I think this was an amazing final facts versus feelings of 2025. Thank you so much, Chris and Scott, for joining us. Sonu will be back next week. He's probably gonna be very jealous he didn't get to join, but if we'd had the 4 of us on this, we'd have to go for 7 hours. We never would have enough time to do this. But thank you to all the listeners, to everyone who's continued to follow what the Carson Group is up to, what Sonu, myself, and our team are saying. If you're a financial advisor and you've kind of lost the love of what you're doing, we would say reach out, right? CarsonGroup.com. We are growing. We are helping financial advisors find the passion to do what they do to help their clients. And you get to work more with Sonu and I behind the scenes as well. If that doesn't make it worthwhile. And if you're a client and you're not happy with your current financial advisor, again, CarsonGroup.com. We've got financial advisors all over the United States. Some of the very, very best financial advisors that we would love to help you find someone who can help you reach your financial goals. So with all that, again, everyone, happy 2025, happy end of 2025, happy early 2026. Fire most people listen to this. Again, Scott and Chris, thank you so much. Look up to both of you. Learned a lot from you. Consider your friends and mentors, and it's just fun to do this. And I wish both of you a successful 2026. Let's keep this bull market going. Everybody stay healthy, and we'll see everyone next week when Sonu is back, giving us an update on his travels. He's traveled all over the place. We'll get updates from Sonu next week. See everybody then. Thank you. Take care.
Information provided on Facts versus Feelings with Sonu Varghese and Ryan Detrick are for general information only and are not intended to provide specific advice or recommendations for any individual. The statements and opinions of show guests may not be reflective of CWM LLC or its affiliates. Past performance is no guarantee of future results. All indices are unmanaged and may not be invested in directly. Investing involves risk, including possible loss of principal. No strategy assures success or protects against loss. To determine what may be appropriate for you, consult with your attorney, accountant, financial or tax advisor prior to investing. Guests on Facts versus Feelings are not affiliated with CWM LLC.